All right, so it is the end of February. This is the last full week of the month. We're actually ending this week on March 1st. So, like I said, I took last week off, and we haven't had an update on the markets now. Some of you haven't seen an update in a couple of weeks. Some of you haven't seen an update in a month. And so I want to go ahead and kind of give you that. Here's where we were a month ago, and here's where we are now. And we're going to look at some targets, all right? And some of them I did really well on, and I know of at least one of them I missed on. I want to talk about that as well, and where I believe we're going. Okay, so that is the plan here for the next few minutes. And so let's start with the S&P 500. So coming into the end of January, we were looking at the S&P 500. It was trending up on both the longer term trend you see here and the shorter term trend that we have right here from about, I want to say probably about the beginning to the middle of December to the end of January. At the time, we were sitting really close to a 484 high. We were looking for a target of 510, all right, 510 on SPY. And we were looking for that. And I said, this isn't going to happen immediately. It might take a little more than 30 days. We were looking at that 30 to 60 day realm. Okay, so we are probably about a month into this particular chart. So how did things go? Well, let's take a look. I have us as very, very close. And in fact, if I were to look, if I were to update the chart to where we are right now, yeah, I mean, we are just bouncing off. In fact, Friday, we hit 510. So we did hit the target on Friday. We're kind of coming off of it just a bit. But there you go, Jay. A little bit less, a little bit more than 30 days. And we hit the target for the S&P, SPY. Now, some of that has to do with trend, and I believe a good bit of it has to do with seasonality. Seasonality that occurred at the end of January and a lot of it in February, okay? Now, we did have a pop last week. We had a 2-day pop last week, which pushed us up to this target. We'll talk about that in just a few minutes. But there you go. So that's target acquired. Let's take a look at the bond market. This is TLT, the iShares Barclays 20-year Treasury ETF. Now, the target on TLT, right? Target on TLT was 105. Okay, that's what we had for that particular target. Did we hit that target? Did we hit that target? Well, no, we did not. In fact, 105, we got about 102, and that was at the end of December, and we dropped since then. Now, at the end of January, we were bouncing off an area right around 95. Where have we gone since then? Well, we are still, we bounced below that, hit a new target at 191.65, and we're back above that, right around that 93 and change area. We need to break 94. We need to close above 94 before I really start to like this area once again. All right, next, U.S. oil. This is USO, United States Oil. This is the ETF that closely tracks the price of crude oil. And so as you can see here, we were in a situation where we were seeing lower lows, lower highs, et cetera, taking us from the low 80s all the way down into the low 60s. Now, at the time when we were coming into the end of January, I felt we were going to drop back down and maybe hit a target of 61, double bottom at 64, potentially a target at 61. But I also said this had to happen by mid-February, because something happens in mid-February. We enter a bullish pattern, and we enter that bullish pattern. And of course, here's where we are right now. Here is where we were at by mid-February. We did drop back down into around the 66 area. Didn't hang out there for very long. We've been moving higher, and we're now bouncing off of support right around 71. I expect a run to back to the mid-80s to break above the low 80s that we had back here at September of last year. I believe we're going to break that and move above mid-80s. There's a lot of bullish seasonality going on in the oil market right now. This has nothing to do with the political landscape. It's pretty much a seasonal pattern that has worked much more often than not over the last few decades, right? Mid-February to mid-July is what we're looking for. And so this is already kind of made a little bit of a run. It's had a little pullback here in the last couple of days. And as you can see here, as you can see there, we had a little bit of a pullback. That's a great entry point that we could see right away for potentially getting long in this space. But I'm being long in this space. I want to be long in this space for months, not weeks. All right. Gold. This is a real interesting one because, I started out, this was come end of January. We had a low at 168.84. We had a high at 192.62. The mid target was around 180. And if you look at the 38% retracement, it was around 183.5. Now, I had and still have a target at 200. But what has gold been doing since then? Well, gold came down and it hit that 183.5. And I have 183 to 183.5 as support. I'm still in the bullish camp. I'm still in the bullish camp because we are, again, now sliding up to the midway point of the smaller trend. The longer trend is still bullish. The smaller trend is sideways. There's a sideways pattern, but we're above that equilibrium place in the sideways pattern. So there's where we stand with gold. Hey, how about Bitcoin? Take a look at Bitcoin. This is what we were looking at last month. We actually had support at 40, support line 140, support line 232. We ran up to that 50. I actually ran up to about 52,000 on the spike and then kind of came back off of it. These are closing prices here. We pulled back down into the 40 area. This was around the end of January. Where have we gone since then? I had a target at 52,000. Well, guess what, folks? We did hit that. I talked about that 2 weeks ago. But check this out. Our support is now at 50,500. That was the resistance from February, from the beginning of February, and the support that we're getting from just last week. There is 1, 2, 3, 4 days where we hit that support line around 50,500. So that's the first area of support. After that, you got to go to 48,190 to find support. But we're hitting new highs right now. These are multi-year highs, with Bitcoin now topping 53,500, and Ethereum is now above 3,100. So, hey, I mean, there's not a lot of resistance right now when you're going back and looking at these things. I mean, when we came off of 69,000 and we dropped, the next move up took us to around 48. We cleared that hurdle a month ago. We cleared that hurdle a month ago, and we're definitely above it now. So guess where the next stop is? You could take a round number, 60,000. And then after that, it's all-time highs. That's where we are. I know it's crazy saying it, but it's where we are right now when you look at where Bitcoin is, relative to where it was even last year. Okay? So that is stocks, bonds, commodities, and crypto. Now, I want to talk about one more thing here, and that is the money calendar. So the money calendar, as you all know, is a seasonal-based calendar. We use a minimum of 10 years of data to come up with this. But what I want to show you is I want to show you the overall calendar. And I've got the overall calendar for February on the left-hand side. And as you can see, the first couple weeks of February up to the 14th were bullish. And from then on, it started to change colors. It went a little neutral. We got a couple of real bearish days. One was on the 21st. The other's today. And so what I thought I'd do, just as kind of neat to do, is you stack this up against the month chart of the S&P. And so the S&P, when you start on February 1st, we really kind of we just literally went up, just like the calendar said, to the 14th. Then we dropped. And yes, we did go up a couple days, down a couple days, pop up, down, down. But this is synonymous right here. The second half of the calendar is synonymous with all of these shades of yellow and orange and light brown, right? Because you've got some bullishness in there and you've got some bearishness in there. Let me show you what we're talking about for today. Today, I'm looking at the last week of the calendar. We come in bearish today, okay? We come in more bearish. We're 76% to the bear side today. We're 57% to the bear side tomorrow. Wednesday, we clock in at 55 bears and 45% bulls. Then we flip. We're a little bullish on the 29th, back to bearish on the 1st. So there's still a lot of the sideways action that's occurring here towards the end of the month. When I click on the day, the 26th day, and I look at the stocks in that category and I re-rank them by trend, or what we call power meter, here are our top 10. Our top 10, 8 of the top 10 are bears. We've got UTX at the top, United Technologies, Goldman Sachs, Lululemon, which had incredible earnings and they jumped to new highs. But that was history. Now it's saying Lululemon is due for a pullback. Intuit's due for a pullback. Royal Caribbean, Tesla's on this list. DFS, PVH, Avgo, and Waste Management. Avgo and Waste Management are the only two bulls in the top 10. Now, as we know, you take a look at Intuit, it's a 9-day trade. Tesla's like an 11-day trade. Look at Waste Management. That's a 28-day trade that's bullish. So something I like to do when I'm looking at seasonality, and I see a lot of bears on the screen, is that, it's in our nature to want to be bullish on things. But when I see this, I like to get a mix. Maybe grab a bear, maybe grab a bull. Right? But that's what we see when we look at the overall stock market. It's still up. You look at the bond market. The bond market's telling us that interest rates might be around for a little bit longer before we start to see cuts. All right. Oil is now entering its multi-month bullish phase, and gold is still doing what gold does, which is moving a lot of sideways, looking, and it's really more prone to interest rates than anything else. And finally, you take a look at Bitcoin breaking to new multi-year highs. The money counter, though, is saying, hey, let's be a little cautious. If you're bullish, make sure that you're looking at least hedging or having some sort of some protection. Maybe you add a bear with that bull.